X and on YouTube to kind of not only be my own journal, but share kind of like what I'm doing, why I'm doing it, and hopefully bring you guys along for the ride. So I wanted to go through today, take a look at what we did this week, because this week was kind of crazy in the market. We had a massive day where we hit like 700 on the Dow. And if I was smart enough, I would have just sold everything, but that didn't happen. And I took a hit, and then we were kind of back where we are. So as you can see, let's take a look at what the year to date looks like here. We are up about 4%. Again, I've talked about starting down 12% right around the beginning of January due to options trading. Short options, never a good idea. And we've made our way up to a 3.5%. Now, granted, we were, that hurts. The 16th, we were at 9%. So, you know, that's a massive, for me, it's a massive beatdown. Makes me sad. So let's kind of see what happens here. 3 months, 11%. That's a little bit better. As you can see, everything we've been doing is that was my dog. Don't worry about him. Everything we've been doing has been working pretty well, keeping it diversified, taking advantage of options when there's premiums that are pretty decent, and kind of going from there. 1 month, about 1.5%. Again, this week we were up 8, so again, I don't like looking at that. Makes me sad. And this past week, 2% down. On the 16th, we were 4% up. And of course, we've got some crypto trading right now, so you know, we're always moving in the right direction. So let's go over everything that's going on. I want to go through the whole portfolio, what I have going on, and some of the moves that were made this week. So right now, the purchasing power is $118. I am a Robinhood Gold member, so $5 a month gets me $1,000 in margin that I can use. And so here's kind of where we are with that. Individual cash, margin totals, options, collateral. So as you can see, although this portfolio is like 9.8 right now, the collateral I have is about $4,600. What I like about that is, in my opinion, the market's going to go down. It's just a seasonal thing. So, you know, the tech, NASDAQ, you've already seen a small decline. And so one of the things that I like to do is keep a seasonal calendar. Stock Traders Almanac is a great little book that I can use to kind of journal my trades and keep up with what is happening seasonally. Things are going to be a little crazy this year because of the election, but you know, right around July of last year is when my portfolio peaked. In the last half of the year, once again went down, and so I'm trying to be a little bit more strategic, getting out of plays once I've had some success. Since October of last year, the market has just gone crazy. Maybe I'll queue up Thinkorswim here. Get out of this. Take a look. Oops, sorry about all that. Where we got Thinkorswim. We could take a look at some charts. Yep, I should have had all this stuff ready earlier, but I don't. And boom. Waiting for it to load. There we go. Yeah, SPY has gone crazy since last October. And you know, I think people have been calling for a pullback for months now, and it has not happened. So what we really need to do is get into a spot where we feel comfortable taking some off the table, because especially in the NASDAQ, Microsoft, Google, a lot of those stocks have gone absolutely bonkers since October. And so, you know, I use this Robinhood account as quote unquote play money, I guess, as a cash account. So I can put stuff in, take stuff out. You know, people worry about long-term capital gains. I mean, if you got to pay 30%, that was 30% you didn't have before you started investing. So that doesn't really matter to me. We'll deal with that during tax season. Sorry that this is taking so long. But we live. Man, there's nobody that really is that worried, because there's nobody in the chat right now. Man, Thinkorswim must be struggling. So let's just go over this portfolio real quick. All right, so Uber, right? Uber was a huge play. It's something that I'm trying to get into long term. CNBC. Every news source that I'm looking at on Thinkorswim has nothing but high praise for Uber's future, and they think that, you know, that stock's going to go to 80 or 90. It's probably not going to happen until after earnings, which I believe is August 6th, maybe. So we'll keep an eye on that. And, you know, we're going to hold on. We do have an options contract. That was up in the money and hurt pretty bad when Uber got crushed this week. As you can see, it's 67.32. It went as low as 65 and change this week, and it was up $75 at its peak. You know, I am lucky enough to be able to keep my eye on the market all day long. And, you know, when it was up to 75, obviously, looking back, probably should have sold it. But I do have a lot of faith that this stock is going to increase, especially because earlier in the week and even the beginning of last week, at the end of last week, we saw a ton of money coming out of tech and into the broader market. Uber was popping. So I thought in my head, I was like, hey, this is a stock that people are getting into. So I didn't have much of a reason to sell out of my positions with Uber. So currently, my average at Uber is 68.20. Portfolio diversity says 17.6, but that's kind of weird to me because I don't know where they're getting those numbers. I think it subtracts the collateral and it's just the money that's actually in shares. I know I've seen like weird things when I look at like Rocket Money, and it looks at like what's in my Robinhood account, and it says I have like thousands of shares of something, but what it's really looking at is just the what it's looking at is what the options look like, and saying that I have like tons of options. Sorry, I gotta plug in right real quick. There we go. So sometimes that diversity's a little off, skewed. I'm trying to pick about 5 stocks and rotate through, because I don't want to be so diversified that I'm not making much. So those stocks, Pfizer, Uber, Lincoln Financial. Currently, I'm in Lyft and AMC, which I do not plan on keeping. I'm just trying to roll and wheel those. And we'll go from there. All right. I super apologize for how long this took. But here we go. So let's look at Uber. I started buying this at the beginning of the year. It had a big increase. We're going to go to year to date over here. Lots of lines. I know. But at the beginning of the year, we were what? 50s. So this is September of last year. So this is right around January. And we're in the 64 area, which is, again, why I think it's so crazy that we're back there. So we peaked this year in the 80s. And of course I sold everything because this is just an area that is real high up there. And you gotta remember, this stock, if you look at it like 3 years for the week, dude, even last year, beginning of last year, this stock was a $20-$30 stock. So we've risen all the way to 67. God bless you if you stayed with it long term. It's doing very well. And I got in the 60s, and I've been buying it ever since. Anything under 70 I like with this stock. What the problem that I had was the fact that I have options on top of the shares, and when things were good, the portfolio was popping. But when things are bad, that's when you really realize that you are not diversified the way you need to. So I had to get rid of, or what my thought was to get rid of some of the Uber positions I had, in order to not see such extreme moves in the portfolio, which is what we saw this week when we basically went from 4% up to 2% down. 6% move in a week is fun when it's on the upside. So this 75-85 option, I had one, and it was in the money. We were riding high. I think we were up 105. This is for the day. Yeah. So this is for the week. So this thing was up to 318, and I paid probably like 180 for it. And then, I don't even know why this stock decided to get absolutely slaughtered the last 3 days. Other than, people in general are starting to get concerned about the market and the rotation. So if you look at the daily, we were doing great, and then boom, 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 just 3 or at least 2 sticks, candles down, big moves. big moves to the downside. And you saw this, you know, inverted hammer that should have been a big warning, but usually you wait 2 candles for confirmation. I've been burned with that. Not burned, but I mean, I've lost pulling money out of DraftKings when I've seen candles like this. Now, on the other hand, there's one right here. And on Friday, we made a higher low. So there's part of me that feels that this is definitely going to become a bear flag, depending on how the market goes. So what I'm looking for is for us to return to about 50% retrace to the upside. And you know, I'm not really sure what I want to do. Do I want to wait for earnings? Do I want to get out of my do I want to get out of that option contract? And technically it's 2, because what I did was this week I averaged down on it. So now I have 2. I have absolutely no I have no desire to buy the shares at that price. So let's not even get into all that. But if I can get out, at least with my initial investment, that would make me happy, even though it really is frustrating that I had a chance to, you know, leave that with a pretty decent sized profit. But c'est la vie, as they say. So yeah, Uber right now we're sitting at 68 as my average, and I think I do a $50 reoccurring on this for next week. So wherever we land, we'll just keep accumulating. The commons I'll obviously keep through earnings, because if it goes down, I'm going to just keep buying. If it goes up, we're gonna get to about 80, 90 and start pulling money out and find something else to work with. So, you know, Uber is probably the thing that crushed me the most this week, because it just did not have a good week. And I think I was buying it last week at like 69, and now we're buying it around 66. So anything under 68 is lowering the average. It's kind of a dollar cost in. It's $50, so I'm not even getting full shares every time I buy. But yeah, we will get there. 67.32 right now. There's the value. Average is 68.2. So not too bad. Especially if we think that thing's going to 100, 80, 90, 100, somewhere in that area. Maybe by the end of the year, if they have some good earnings. So yeah, that's kind of a real quick look at Uber. So let's look at some of the moves I made with the options this week. You know, I'm in this AMC. I think one of my videos I talked about it. Bought 100 shares last week. I had just a couple shares of AMC, and I ended up, you know, buying 70 some plus to get to 100, so I can start selling covered calls on that. You know, I'm looking to get out at $6. God knows any day that thing can shoot up, because it's a meme stock. So one of